Hello everyone, welcome to the Commodity and Currency Buzz. This is Gaurang Somaiya, your FX analyst. We have seen that the rupee as such has been confined to a narrow range of 82.30, 83.05, and we have seen that despite the major events getting unfolded, be it on the domestic front or on the global front, we have seen that rupee as such has been very resilient. It clearly suggests that the central bank somewhere or the other is trying to intervene and curbing the overall volatility. On the domestic front, we had the union budget, we had the RBI policy meet, but none of it kind of impacted the currency. On the global front, we had most of the major central banks coming out with their policy statements, raising rates as well, giving out a little bit of hawkish outlook. But it seems that rupee as such hasn't reacted. In the next month, that's in the month of March, we are expecting that the rupee will be reacting to the how the inflation comes in, because that's slightly coming on the higher side if you look at the month of in the month of January, and that's kind of impacting the currency. So in this month we are expecting that CPI and IIP will continue to remain in focus, and at the same time, if RBI continues to intervene, we'll kind of see the rupee holding on its range of that 82.20, 82 on the lower side, and on the higher side, unless and until this 83.20 is held on, we could see this narrow range bound trading continuing for the dollar rupee pair. On the global currencies, we have seen that euro, pound, Japanese yen, most of these crosses have been under pressure, and it was the dollar index which kind of influenced the weakness in most of these currencies. We had the FOMC policy statement, we had the Fed governor coming out with his comments. All of it was suggesting or supporting the dollar index. We had a few important numbers that came in from the US, starting with the non-farm payrolls number, which was quite robust. We had the retail sales number that came in, that again was above estimates. All of this was supportive as far as the dollar index is concerned, which is why we've seen most of these currencies coming under pressure. We also had the ECB and the BOE coming out with their policy statement. It seems that the ECB is still likely to raise rates. BOE, on the other hand, could take a bit of pause, but all of this did not have much of an impact. It was an immediate impact that we saw for a couple of days, but primarily it was the dollar index theme which kind of played out for the currencies. Overall, in this month, we are expecting that the ECB and the BOE policy statement is going to be impacting the currency. We are expected to see ECB raising rates by another 50 basis point. And as I mentioned, that the economic numbers coming out from the US is going to be important to watch out for. Inflation has been a little sticky if we look at the US number. But yes, in this month as well, we'll be keeping an eye on this number. If the number comes in slightly above estimates, we'll see that impact coming in on the dollar index. So overall, to sum it up, we are expecting that euro could be witnessing a bit of selling pressure at higher levels. Weakness in case of pound could be a little restricted. But if I talk about the Japanese yen, we have seen that some bit of announcement have been coming out from the BOJ. They've been announcing a lot of bond buying program coming in. That immediate reaction is seen on the Japanese yen, but overall the bias or the trajectory for the USD JPY pair has been on the upside, which means the yen could continue to remain under pressure against the US dollar. So that's it from my end. For more updates on commodities and currencies, follow Motilal Oswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.